what's the matter with Pier 1 Imports, and can it be fixed? Not that long ago, Pier 1, the home furnishings retailer with over 1,000 stores, looked like one of the greatest turnaround stories of the post-Great Recession era. But after a string of missed numbers, including a disappointing quarter reported this Wednesday night that caused the stock to lose an astounding 18.5% of the value, just yesterday, we have to wonder if this company is facing some serious long-term problems, and if so, can it be turned around? When Pier 1 reported Wednesday night, they missed on the top line and the bottom line, and also slashed their full-year guidance. But at the same time, management said they have a strategy to turn things around, and they provided a detailed plan to get back to profitable growth. So has the stock been overly punished? Let's take a closer look with Alex Smith, the president and CEO of Pier 1 Imports, to learn more about the quarter and the company's prospects. Mr. Smith, welcome back to Mad Money.
Jim, thank you for inviting me.
All right, Alex, you say it right up top in your release. You say, we were challenged by soft store traffic and, more significantly, by declines in our merchandise margins. Can these be reversed within the next 2 or 3 quarters, sir?
Well, Jim, we have a great confidence in our merchandise that's coming in the third and fourth quarter. And as you know, Pier 1 is really good at the holiday season. We know our store execution is going to be great, and we're really confident in all the enhancements that we're making to pier1.com, which come into play in the next month or two. So we're absolutely going to give it our best shot.
Do you think, your online is very compelling. At one time when we spoke a few years ago, it wasn't that good. Are we in a position now where I detect from the call that maybe you have too many stores because online's so good?
Well, you're right. I mean, online is just amazing, and our customer is voting and saying this is how we want to shop, which is why we accelerated our whole omni-channel strategy, which we call One Pier 1. But, Jim, the amazing thing about this, and this is what's so cool about One Pier 1, is 50% of our sales are actually touched by the store in some way or other. So what I mean by that is 25% of our online sales are booked through the PCs that we have in store, and we're putting more of those in. And 33% of our order online is pick up in store. So that's a very sort of powerful, very powerful model. And we see the stores and the online business as inextricably linked. They really sort of play together, and that's what our customers like. Now, having said that, on the margin, are we going to take a very, very close and hard look at our store portfolio? Absolutely. And there may be some 3-store markets that only should be 2-store markets, and maybe some 7-store markets that should only be 5-store markets. But rest assured, we're going to look at that very, very carefully.
Now, your company's been buying back a lot of stock. It bought a lot of stock back this quarter, and yet the quarter was poorly perceived by the analysts. Was it a mistake to buy that big chunk of several million shares? Should you pull back from the buyback? Maybe rethink that until your offerings come through that you'd like to see?
I think that's a very good question, Jim. But here's what we think. We're going through a bumpy patch at the moment, but we have a strategy which we're absolutely confident in. But this major transition, as we move from the hugely successful bricks and mortar business, which you kindly alluded to in your introduction, as we transition into what we believe is going to be an equally, if not more successful omni-channel business, we know that as we move a little further into this transition and the investors start to see some of the benefits of all the investments we make coming through, we know that our stock's going to start moving again as it did in the past. So we feel really comfortable about buying back stock because in the end, it's going to be great for our shareholders.
This question. I know that you talk about the omni-channel and how you've been integrating the stores, but I have to tell you, sir, when I go in for Halloween, for instance, I might go in for one particular item. I have walked out for my daughters when they're at school. I have walked out with maybe twice as much merchandise as I thought I would when I went in. But if I'm on the website, I don't do that. I'm targeted. Don't you risk the idea that people like me can just go and we get what we want and not necessarily what we didn't know that we wanted because we went to the store?
Well, I think that's one of the interesting things about this whole sort of move to online. We're very focused on building the omni-channel multi-channel customer. And here's why. We, at the moment, so let me just back up. At the moment, 60% of our sales or thereabouts are coming from brand new customers who are shopping us online only. The balance of our sales are coming from multi-channel customers. These are predominantly store shoppers who we've also converted to be online shoppers. And what the data tells us is the multi-channel shopper shops more frequently and spends more money than the store-only customer. In other words, we get an extra visit and an extra purchase. So what we're trying to foster is the best of both worlds, because to your point, when you're in the store and you're browsing, you're going to see something you didn't know you wanted and you're going to pick it up. So we have to make the two work in harmony, and that's, again, why we're so focused on not only the in-store experience and the online experience, but the two working side by side.
Well, I appreciate your coming on. I know it was a tough week. You didn't duck it. You came right on. I want to thank you, Alex Smith, the president and CEO of Pier 1 Imports. Good to see you again, sir. Mad Money is back after the break.